This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin has very low fees, lower than many of the other crypto exchanges in the market. You can also stake your cryptocurrencies and keep 100% of the rewards. There are no fees. Other exchanges charge fees. OKCoin allows you to keep 100% of the rewards. Sign up with OKCoin, link in the description. Hi, everyone. Welcome back to the Thinking Crypto channel, your home for crypto news and interviews. With me today is Dan Tapiero, who's the founder and CEO of 10T Holdings. Dan, great to have you on.
Thank you. Great to be here. Excited to be here.
Well, Dan, like I said before the recording, I'm a bit of a fanboy. I've followed you for a long time, trying to learn investing, and certainly appreciate the knowledge that you shared and watched your interviews. So it's just an honor for me to be interviewing you, and I'm excited. So let's start with your background. Where you're from? What were you like in high school?
That's kind of funny. What was I like in high school? I guess, kind of an average guy in a sense, except I was at a boarding school outside of Princeton called Lawrenceville, and fantastic school. I was a swimmer and water polo player. I was a high jumper, so I don't know if that's a normal combination. But yeah, no, I played water polo there, had a great water polo team, and ended up playing in college as well. It was a very academic place. So, you kind of were stuck, doing a lot of reading basically. And, I really enjoyed that. Then went off to Brown and, studied history, majored in history, did a master's in history as well. I did this 5-year program. 19th century European intellectual history. That was a lot of fun. Played water polo there. So I had a pretty, I guess, easy-go-lucky kind of school time. And then I figured my last year at school, well, I've got to do something now. And I started hunting around for, what I was going to do, and started reading all kinds of things. And on my mother's side, my grandfather had been a banker, had his own merchant bank in London for a while. And on my father's side, the family had been involved in all sorts of different businesses over many years. So I, started looking at what they were doing, et cetera, what they had done. And I came across this book, the Soros book, The Alchemy of Finance. And I read that book. I read the Market Wizards book, and this is in the late 80s, early 90s. And I just thought, wow, this is very cool. You come up with a big, macro thesis, and you make an investment, you make a bet. You don't just write a paper and then hand it in and get your A or your B or whatever. So I've pretty much done the same thing for 30 years, which is just lots of reading, and then thesis building, using data, and trying to come up with something new that someone else hasn't come up with already.
And how did you end up founding 10T? And maybe you can tell us what led up to the different places you've worked at, Tiger. And
yeah. I mean, 10T in a way is a departure for me, but not exactly. So 10T is a private equity fund that focuses on mid to late stage companies that are operating in the digital asset ecosystem. And so the first 2 funds we launched in January and then in March. And the funds now have 400 million in them, and then we have another 350 in co-invest. So we're managing about 750 million. I mean, tremendous growth, I think more than anyone anticipated. We own 11 businesses, some of the marquee names in the space, Kraken and eToro and Bitfury, Huobi, Ledger, Figure, Deribit, Figment, Animoca, Helium. So these are, businesses that we think sort of have passed our metrics. They've qualified as what we call 10T companies, and they're already operating at scale. 9 of the 11 we've invested in have market valuations already over $1 billion, and the 2 other ones were, between 500 and $1 billion. So that idea really came out of my interest in Bitcoin and, to a lesser degree, Ethereum in the beginning of 19. And I'd been introduced to Bitcoin through my gold business, GBI, Gold Bullion International. We had integrated in 2014 with a firm called BitReserve, which today is the Uphold wallet. And that was sort of an experience for me watching, us eventually build this platform. We became the first place where you could buy and sell physical gold to buy and sell Bitcoin or Ripple. Unfortunately, it didn't lead to a lot of business. We were a little early in that. And so, but the year spent in, doing the integration, I learned a lot about, what it was. It was just still a little small Bitcoin. It had a $10 billion market valuation and just wasn't that big for a macro investor. You alluded to it earlier, I'd been 25 years in the macro hedge fund business and started my career really at Tiger, and then worked for Michael Steinhardt, and then did 10 years with Steve Cohen at SAC, and then worked for Stan Druckenmiller at Duquesne. So I did sort of a 20-year, trip of service around the macro hedge fund world. It was very exciting, learned a ton, managed my own portfolio, built a 16-year track record, and but was mostly involved in, currencies, bonds, emerging markets, traditional macro assets. And so didn't really focus on companies or businesses that much. Until 06, I got very focused on agriculture. Was working with Druckenmiller at the time, and my investment team and we came up with this idea that farmland prices in the US were going to double in the coming 5 years. And Stan loved the idea, and we built this company in partnership with Goldman Sachs called AgCoa. And AgCoa by 2013 had become the largest private farmland REIT in the US, and we ended up selling that. But it was a process there of moving from a macro idea, sort of that thesis, to starting a business and applying it, that macro idea to an operating business. And I think that was sort of my first taste of, wow, I can do a lot with all this research, Stan really showed me that you could think horizontally, figure out other ways to apply those ideas, and did that again with GBI, the gold business I mentioned. GBI was an idea I had. I wanted to own gold. In 08, 09, I was worried about the banking system collapsing. It didn't, thankfully, but I was worried about it. And people were telling me, oh yeah, they have physical gold, but they have it stored in their bank. And I thought, well, if I think the bank is going to go under, why would I store my gold in the bank? It just didn't make any sense. So I tried to find a way to store gold outside of the banking system. And, that was therefore the sort of the genesis of the idea for GBI. And today GBI exists. My co-founder is is the CEO of the business. We've now done over 1 million trades for clients. We have over 300,000 clients globally. We're the 3rd largest vaulter of gold in the world outside of the banking system. So it's really grown a fantastic business. But that again, I was long gold in my DTAP portfolio, and then just started thinking about other ways to apply that thesis. And again, that GBI, sort of the same thing here with 10T, got very bullish on Bitcoin in 18, 19 after the collapse. And just saw that, of course, it was just a classic bubble. And I was on record in, early mid-19, early conversation with Raoul Pal, you mentioned before, as an old friend, and then, with a bunch of other people in the space, talking about, what I thought the potential was of Bitcoin. And, that led me to position in DTAP, and then also to think, okay, well, how else can I get this exposure just in a different way? I like this idea of building a portfolio of private businesses that are sort of the picks and shovels businesses that are, they're building this new digital asset ecosystem. All of these companies, there's tremendous servicing and building that's going on. And, I've mentioned some of the names that we own, and I think they're sort of, emblematic of, the type of exposure that I wanted and that we were able to get on. So it's been quite fun.
It's so fascinating. And you mentioned Stan Druckenmiller, and obviously you worked with him, and now you're both here in the crypto asset class. With your fund 10T, are you only investing in the companies that are building the infrastructure? Are you planning to invest in the assets themselves, or is there like a regulatory hurdle that we need to get past before you do that?
Yeah, no, I mean, I would, we only invest in the equity of the businesses. And, there are a bunch of reasons for that. I'd love to invest in some of the early stage protocols and cryptocurrencies, but, I didn't really feel that I had much of an edge with so many smart VCs in the space. I'm not a venture capitalist. I'm not a technologist. I'm not going to win going up against, Pantera or Andreessen or Paradigm or Polychain. I mean, they're taking apart the code. They're looking at different chains in ways that I couldn't imagine. And, that's wonderful. They're also, trying to make a 100x or 1,000x return. I think if we make 5 to 10 times return on our portfolio, I'm happy. I think, crypto guys may not be happy with that, but for, legacy, 1 foot in the legacy world guys like myself, actually beginning to have no feet there, but traditionally coming from that world, that kind of return profile is still pretty exciting. So it's also that we do have investors who are not allowed to own cryptocurrency. And so we've got a very, well-known state pension fund. We have an endowment. There are foundations that we have. And it's kind of like a bridge too far for them. We understand it, of course. But I think it was, I've said this before, I see my space, my role in this space as a translator. And I think it's just been very easy for us to bring a whole new group of investors into the space through this way. They understand private equity. It's straightforward. It's simple. They don't need to understand token economics. They don't need to understand the difference between Chainlink and Polkadot. Sure. And, and again, we put almost $700 million to work in this space, helping these companies build and grow, I think at a vital time. And so I think that must be more than anybody else. I mean, I'm not sure, there is no measure, but, I think we're doing a lot to help increase adoption and expand the universe here. So.
Now, you have the perspective of gold, which has been obviously a huge hedge for how many hundreds of years.
Yeah.
And now Bitcoin is said to be digital gold. Are you more, and this may be an awkward question to ask, are you more leaning towards Bitcoin now because the times are changing? We're in a technologically advanced digital world. And are you seeing more money going towards crypto versus your gold side of the business?
Yeah, I mean, that's a great question in a way. I mean, the hard money crowd, the people who believe that there shouldn't be an infinite amount of fiat and liquidity out there or that there should be some controls on it. The US should not be allowed, to do modern monetary theory and have a 15%, budget deficit without there being consequences. That's sort of the hard money mentality. And of course, gold, there's a finite amount of gold it's increasing at 1% a year, very hard to get out of the ground. Supply is constrained. Well, it's also a nearly finite amount. Bitcoin, of course, there's a finite amount of Bitcoin, and only 21 million, and we know we have a schedule of when they'll be produced. So I think that the mentality of owning an asset that's in short supply for the traditional investor is something they understand. Mm-hmm. I think that it's been a mistake to call Bitcoin a digital gold. I mean, I think it is, but the problem is that Bitcoin is actually a lot more than digital gold. You now have layer 2s on top of Bitcoin. You also have, again, this is different. I mean, Ethereum, the supply is not as limited, but actually they've done a lot now to make sure that it is limited, right. Or it's actually contracting in some cases. They're burning Ethereum. But I think that, when I look out at this world and how much has changed, even in the last year in terms of growth, I mean, there's been astronomical growth in what I call the DAE, this digital asset ecosystem. And so in a way, the narrative is moving beyond just Bitcoin as a store of value, Bitcoin as digital gold. I mean, volume, as an example, from June of last year until today is over $40 trillion. Okay, that's a massive expansion of volume in cryptocurrency trading. The value of Ethereum and the other proof of stake protocols has exploded. I mean, I think it's almost $500 billion right now. And so, stable coins have grown 10x. The borrowing and lending business has grown 10x. And forget even talking about NFTs, which 18 months ago didn't even exist. I mean, the growth rate in NFT sales is, 100x. And so there are lots of interesting things going on in the overall ecosystem. I think Bitcoin is the core. I think Bitcoin is the key, that collateral for the system. But there are going to be lots of also non-monetary applications of, what people call blockchain technology, or I really call it the technology that's used to power Bitcoin. And so to me, yes, it's digital gold, but gold itself has around a $10 trillion market value, right? And total value of all the assets in the world is about 500 trillion. So that puts gold at around 2% of the total financial ecosystem. I don't think Bitcoin is worth only 2% of the entire, digital asset ecosystem. So as I said, I think Bitcoin is something much bigger than just gold. Now, I like gold quite a lot as a hedge for the traditional financial world, since bonds yield almost nothing and in real terms do yield negatively around the world. I think if you have a traditional portfolio and you have an allocation of whatever, 70-30 or 60-40, a big chunk of your portfolio is non-functioning. So, in the period from 1981 until basically recently, that portfolio worked great because every time you had a wobble, every time there was a recession, your bonds compensated for the drop in your equities, or the absence of gains in the equities. Bonds can't do that anymore. And I think that if we have a slowdown, like a natural cyclical slowdown, or something happens with liquidity, and the Fed once again comes in and continues to inflate the money supply, I think gold can go up 30, 40, 50% again. And gold really, every institutional portfolio, I think today, should own some percent in gold as a hedge to the assets or the equities that are in the portfolio. And so I just think gold is a different role. I do think Bitcoin has probably taken a little bit of money out of gold, but to me, there's enough to go around.
Sure.
So I just see gold as evolving and having a slightly, having that function as a hedge, because the bonds are sort of disappearing as an asset class. And, I think that's sort of a very non-traditional take on things, but I think it's the right take.
And this is hypothetical, could gold become tokenized on the blockchain where you have that verification layer, and maybe it's traded similar to other crypto assets, or, with the token economy that we're headed to?
Oh, no question. I mean, you do already have some, Pax Gold. Paxos has a gold back token. I think this is going to pick up. I think there is demand for it. I think the fungibility, once you're on a blockchain somewhere, that digital asset becomes fungible with other digital assets. So I think all things of value basically will eventually get put on a blockchain and exist somewhere in this DAE. I mean, it just seems like, everything from mortgages to, the jewelry or art you have, everything will be tokenized, and then, in theory, fractionalized as well.
Yep.
It's hard to imagine because we live such in an analog world and we have our stuff and etc. But the next generation is really very different. I think I read somewhere that people under 25 spend like 8 hours a day online, one way or another. They really live online, and they're really comfortable with this concept of digital ownership and digital value. Some guy pays $100,000 for a Ferrari online. You go to a 60-year-old guy and you say, hey, would you prefer a Ferrari online at 100 grand, or would you prefer a real Ferrari for 200 grand? Or I'm just saying, I think there's a massive generational shift that's going on right now. And it's hard for older people to make that adjustment. I really think it's very hard for them to live in a world that is completely, abstract and non-tangible. And look, even for me, I grew up with there were no cell phones, right? There were no real computers. There was a big mainframe thing in my high school, and we were like, it was a big deal. We had a whole building called the Computer Center, and the whole building was just for the computer. All right. And then there were 6 terminals around it. And that was a big deal in 1983. Right. And so I think it's just hard for people to make that adjustment. And that's why it's taken so long for, Bitcoin to be accepted. Yes, it's $1 trillion market value, but here we are every single day. You see it in the space on Twitter. China bans it again. The FUD comes to every investor meeting I do. They ask me, oh, what happens if this guy bans it or America bans it? And I say, what I say is that, look, this is the first truly global macro investment of all time. I said, the Bitcoin network and cryptocurrency exist in every country in the world. And 90% of the world's crypto volume, trading volume, is outside of the US. So yeah, okay. The SEC is trying to get their mind around what to do, and they're smart guys. I'm sure they'll figure it out. But in the meantime, frankly, it doesn't really matter that much. The guys in the space are, increasingly focused on compliance and self-regulating, and and more importantly, it's just 90% of the world. Americans think everything sort of revolves around them.
Yeah.
And if there were issues here and the authority said, well, we're going to cut trading volume in half, so that's 5% of world volume, I don't think it would even matter. I don't think it would, initially you might have a price hit or something, but look, China banned Bitcoin mining earlier in the year, right?
Yeah.
And I think we all in the space thought, oh, well, if that ever happens, Bitcoin's going to get destroyed and the space is going to be over. And look what happened. Basically nothing. We're still at 40,000 and Ethereum's at, 3,000. This has just become something much bigger than I think most people are accustomed to dealing with in their investment lives. It's bigger than all the investments that I made in my career. I mean, in terms of the importance and just the nature of the structural change.
And to your point, I read reports of capital leaving the United States and going to ETFs in like Canada and other countries, which is obviously one of the things we're waiting for in the United States, a Bitcoin ETF. And obviously there's going to be an Ethereum ETF eventually. And since you brought up the SEC, let's talk about that, because a lot of people are frustrated. They're a bit annoyed at Gary Gensler and his ask for more power and all kinds of comments about stable coins, exchanges. What do you think needs to happen here to fix the situation? Does Congress need to step in?
No, I just think he needs to engage with some of the leaders in the space. And, I've said this in the last podcast that you mentioned that I did, and that is that, the FOMC, the Federal Reserve, has a private market shadow committee. And, there are 10 or 15 guys on that committee. And, they're important people in the world of, in the financial markets. And I think it still exists. I mean, I knew some of the guys on it 10, 15 years ago. And, they're there and they meet quarterly, and they give advice to the Fed and they tell them, what they're seeing in the markets. And I think that, the SEC should definitely have, a private market group that they get together, whether it's once a quarter or once a month, or that they start building relationships. I mean, the guys in the space, Barry Silbert at DCG runs a massive business, Mike Novogratz at Galaxy, certainly Armstrong at Coinbase, Jesse at Kraken. You bring in some of the guys who are running the big businesses, who are employing lots of people, who are clearly, generating hundreds of millions and billions of revenue. These are not like silly businesses around the edges, that are doing nefarious things. I think the US has taken a little bit of the wrong approach in some ways. I think we should be actively encouraging the growth of this space here, frankly, with incentives. I mean, we give tax breaks for all sorts of things. I think you're seeing a huge new Bitcoin mining community grow up in Texas. Texas is a place that is super pro-capitalist. I think they're welcoming them with open arms. I think that's fantastic. It would be great if we could become, the hub for Bitcoin mining of the world. That would be wonderful. And that was done without any incentives. Look, in a perfect world, forget about government incentives. We have, very little government intrusion into the economy. I mean, the less, the better. But I mean, I just think the way that we're going now is completely the opposite, right? It's completely the opposite. And I just, look, it's not even their fault. It's a very hard space to learn. These are hard assets to understand. Ethereum is super complex. Most people who own it or who trade it don't really even know how it works. I mean, you've got Antonopoulos and a handful of the genius guys, who understand it down to the math and down to the code. But, certainly very few people in Washington do. And so, before they just like wake up and start banning everything, I think they really need to engage with some of these guys. My guess is they are, because the American guys are open to dialogue with Washington. The problem, though, is that this is a global business, and there are many businesses that are dominant in this space that don't touch America. And so we're going to have to think differently about how we approach this problem, because there are countries out there today that are doing a lot to try to bring the crypto business to their shores. And you've got Singapore, I learned this morning Dubai has set up some sort of free trade zone or some kind of I don't want to call it incentive mechanism, but encouragement. Portugal is becoming another place. Of course, we know about Switzerland and Puerto Rico. These are places that are welcoming people in the business because they see the wealth creation, but they also see the technological innovation and the financial innovation. And I think that the US, for the first time ever, really, and certainly in 40 years that I can go back in my head, the US is not at the forefront of financial and technological innovation. Like, we invented the mortgage-backed security market in the early 80s. And it feels to me like what's going on with the cryptocurrency world, it sort of feels like an early stage market like that, like the early 80s for mortgage-backed securities. Also feels to me a little bit like with the businesses, like it's 1996 or 97, I'm owning some of these businesses, hopefully the, Amazons and Googles of 20 years ago. Of today, I'm sorry. Yeah. So, I don't really have enough information to know what actually is going on underneath the hood there in DC. The noises and the signs don't seem great to me. Yeah. And I do know that there are guys who are sort of crying out for, having their voice heard, private market guys. So look, the US always seems to find its way. It's just that this world is moving so quickly. I learned just a few days ago, there are more nodes in Germany than there are in the US.
Yeah.
Think about that. We have 4 times their population.
Right.
Right. So there are other people out there, and we shouldn't take it for granted that just because we're the richest country out there, that we're always going to be that way.
Mm-hmm.
Yeah.
Yeah, it's interesting, and obviously there's a big lawsuit that the SEC has against Ripple over XRP. A lot of eyeballs on this, and the folks there have talked about it. Hey, we're going to operate overseas, or there's other companies that I know of. I've interviewed some of the founders, and they're like, hey, we can't offer our token here because there's no clarity, so we're just going to operate overseas. So, what do you think about the Ripple lawsuit, and could the outcome, kind of determine how the rest of the market is regulated?
I think what happens with, a Ripple might be a little specific to Ripple versus, when will companies here be able to feel comfortable to issue a token, right? So I think it would be great if we had some regulatory clarity about token issuance. Again, Gensler saying, well, everything's a security. Well, that's not exactly true. So I don't, Ripple has been around for a while, and, hopefully everything gets resolved in a positive way there. But I don't think, even if it is resolved, that it will resolve the question of what are the regulations around issuing tokens here. And so I think that's a whole, that again needs, I think, a huge amount of interaction with some of the private, with the people involved in the token markets in the private sector. You are seeing, and you're right, you're absolutely right. You're seeing companies saying, well, I want to benefit from issuing my own token, and just, we just won't touch the US, right? And again, it's only 10% of the world's volume at the moment. So, we'll be based somewhere else. Take a look at FTX as an example. They were in Hong Kong. Now they've moved to the Bahamas. Why? Because the Bahamas have a clear regulatory framework. So I think that's, I think people just want clarity, and then they'll make their decisions.
Absolutely. Let's talk about the crypto market right now. Obviously, it definitely follows Bitcoin's move. Do you feel we're still in a bull market? And I know you have a price prediction of $500,000 Bitcoin price, not now, but in the years to come. You know,
Yeah.
what's your pulse on the market right now, and then talk about your prediction as well.
Well, this bull market, unlike previous, I think really was led and is being led by Ethereum and sort of what they call the Ethereum killers, you know, the other proof of stake competitors. So I, you know, I think that's different. We look at Bitcoin, and from last year, it's up 4 times, and Ethereum is up, 20x. So clearly, Ethereum has led this. I think there are increased number of use cases that are not financial or monetary. Well, they're not like, store of value use cases that don't require such intense security, that don't require the, intensity of the proof of work algorithm. And those things have really been blossoming. So again, I'm very open-minded. I think that you could have a digital asset ecosystem being powered by Ethereum. It could be powered by Bitcoin as well. It could be, I just think there are going to be a lot of different use cases. And I always say, there isn't only just one hamburger. It's not like McDonald's is the only one that makes the burger, right? You can get a burger. They're all different kinds of burgers, and people have different tastes and different flavors. And I just think that's humanity. And to just think that there's going to be one thing is just goes contrary to everything that is naturally human. I'm not saying one is better than the other. I'm just saying that's the way that it is.
And that's like, we just look at the internet. There's Amazon, there's Google, there's eBay. The different purposes, they all work on the same infrastructure, so to speak, the internet. So I think and I think Raoul Pal, your buddy, he's kind of explained it well with Metcalfe's law. And because there's monetary value attached to it, people get very emotional, and there's maximalism and things like that.
Yeah. Yeah, I mean, look, the maximalists have a point for sure. But I don't think that anything really is threatening Bitcoin's position. I think they would just prefer, the digital asset ecosystem in total is $3 trillion in value. So that's Bitcoin, Ethereum, all the cryptocurrencies, plus the equity value of all the businesses in the space. And that's how I, categorize it. I think the maximalists would just prefer that 3 trillion to only be in Bitcoin. And I get that. But Bitcoin is $1 trillion asset. Yeah, I think over the next sort of 5 to 7 years, it can get to 3, 4, 500,000. I thought for a while it was going to rest at around 50,000 because that's a 1 trillion value. And that's a great accomplishment. I mean, how many assets get to grow to $1 trillion? And it's done it in a completely, there hasn't been a centralized hand guiding it. It's been, it's a completely decentralized network. And I think it's something of enormous value, such enormous. I don't think it can be replicated. I don't think anyone, any business, any person could go out there and reconstruct the Bitcoin network from zero as we have it today. And so I think that's worth a lot more than just $1 trillion. I mean, Amazon is 2 trillion, right? And that's one business and in one economy. So I think to think that Bitcoin can be 5, 6 trillion is not really, people on Twitter call me bearish. Oh yeah, Dan, you're so bearish. Like you're only thinking go to, 500,000. Look, it's been the greatest performing asset in the history of the world. It's up 250% annualized over the last 11 years. So it's already proved itself. It already has the greatest track record of all time of any asset. And still, every single day, there are people saying, oh, it's crap. It's for drug dealers. It's going to get banned. It's just phenomenal. I mean, what does this thing have to do to get people to stop attacking it? I mean, it's just incredible, right? And the Chinese, I think this is the greatest damage that the Chinese, self-inflicted damage that they've done to themselves, honestly, in 30 years. And, it's good for us. Look, it's good for us because eventually it'll benefit us. The one thing I would say, though, about us is, listen, the U.S. is a strong country. Nowhere has sort of the rule of law. Nowhere is property as respected or as honored as in the United States. And, yeah, I know they're worried about stable coins. And okay, yes, they yield 5 to 8% or whatever it is. And yes, money would leave some of the banks. Okay, yes. Not all the money is going to run out of the banks. The Fed does not have to worry. But the bottom line is we have the most robust system ever created, even after '08, even after bubbles and all of that business. Just look back into history. And you know what? Our system should be able to take a little bit of pain. So yes, if a few banks went under because there were bank runs, because money was flowing into the digital asset ecosystem, so be it. We'll be stronger for it in the long term. And you know what? Eventually, those yields that exist there on stable coins, if there was a huge amount of capital moving to that DAE for those yields would decline.
Yeah.
Right? Because let the market work. Right? There's clearly a problem today that there's no yield in traditional assets. Okay, so all of a sudden, there's this growth sector that really is starved for capital. There's risk. People think it's crazy. Institutions won't touch it. Okay, and that's why there's a yield there, because there is some risk. I don't think there's much risk, but people think that there's risk. So if you let the market function work, yeah, okay. So what if $5 trillion comes out of, the banking system in the US and goes into the DAE, or 5 trillion globally, forget even about the US. So what? Let the money go there. Let it fund growth, right? I mean, we're a growth equity fund. We see massive opportunities. Our universe has expanded, get this, by 500% in the last 1 year. Okay, our universe of companies that we invest in. So, and there aren't that many guys focused on this mid to late stage. The area is capital starved. And so, I think if the authorities in the US had a little more faith in the US and a little more faith in the free market system that is, generated all the wealth that it has over the last 30, 40 years, even with everyone complaining all the time in the US, everyone has got some problem. We're a lot better off than we were 30 and 40 years ago, okay? And the free markets got us there. It wasn't anything else. So if they just let the free markets work, so what if, US pension funds decide they want 7% yield on a stable coin instead of minus real yield in their JP Morgan account? So what? Let those pension funds get that yield. Let them take the risk if they want to. They're smart investors. So for me, a little bit, this is like, yeah, this is the new world. The US has always been about the new world, right? We are the new world. And so it's just disappointing that we don't have enlightened people, at least in my view, down in DC, who aren't afraid to take a little risk, right? There may be some risk, but I really think we need to let the market work here. So
absolutely.
Anyway, I'm very positive, because even if the US wants to drag its feet, there are many other places all around the world that are, very excited for this kind of growth and wealth generation.
And on that topic, we just saw El Salvador adopt Bitcoin, making it a legal tender.
Yeah.
And I want to get your thoughts on that. And do you see other countries, maybe the less developed countries, following suit?
Yeah, I mean, so that's exactly the point, is that it's not just about America, it's about the world. And there are many countries out there that don't have stable monetary policies, that don't have stable currencies, where the wealth of their citizenry is constantly being debased.
Yeah.
Either through bad policy or corruption or whatever. I mean, we have it pretty good in the US, right? People are honest here, more or less. The Treasury functions, the Federal Reserve functions, but in most of the countries in the world, that's not the case, right? So El Salvador took a step, in a direction that they think will benefit them. You don't take a step like that if you don't think it's going to help you. And there are going to be other countries. And it was always going to start with the smaller countries. I mean, look, how many devaluations do I recall from my global macro days? I mean, I lived through the ERM crisis in the early 90s, the Asian currency crisis in 97, the Russian default, the Brazilian deval, the RG deval. I mean, this was the bread and butter of macro hedge funds for 20 years. And yeah, the US, relatively speaking, of course, the dollar is stronger. We don't necessarily need a Bitcoin or a stable monetary unit the way these countries do. So I think Nigeria is another one, right? Yeah. I think today there was even some news about Nigeria, wasn't there? Obviously in Venezuela, we know about the situation there.
Yeah.
That's an extreme situation, but I've got this chart here. It says, how common are cryptocurrencies around the world? And there's a little survey here, and it says, share of respondents who said they've used or owned cryptocurrencies. Nigeria, 32%. Vietnam, 21%. Brazil, 18%. Colombia, 18%. South Africa, 17%. Argentina, 16%. Turkey, 16%. Peru, 16%. Mexico, 12%. Chile, 11%. Indonesia, 11%. Spain, 10%. Russia, 9%, right? I mean, you only get down to US here, it says 7%, right? So I don't know. I don't know that Americans are going to all of a sudden think globally. We've always sort of been a little isolated, but with the internet today, and if you look across, you look out at 10 years, 15 years, it's just inevitable, right? That we've got to think of ourselves within a global context. And there are going to be countries out there that see this technology as a savior. And, because they see what it is and how it can transform their economy. And I think it sort of behooves us to take it more seriously.
Yeah. And in the United States, we're seeing companies like MicroStrategy, Tesla, and many others that are putting Bitcoin on their balance sheet. Do you expect that trend to continue? Maybe more tech companies, the likes of Amazon, Facebook, and so forth, to potentially do this?
Well, I mean, I get it. I think it's nice that it's happening. It's good. And Saylor, is a genius. And the guy has injected a huge amount of energy into the space. I think he's great. But corporate treasurers in the US are very conservative. So I doubt that corporates will really be putting Bitcoin on their balance sheet. I mean, the people who need Bitcoin are the people who need alpha, who need return. Those are the investors. So I think that you've had a shift, a little bit of a shift in the investor class, but still we're very early days in terms of adoption. Sure. As I said, it feels like 1997 for the internet for me. Yeah. So I just, um, those pension funds I mentioned before, they just don't have the benefit of that 7% bond yield, that they used to have, or even 5%. And they're going to need to find ways to generate income.
Yeah.
And so insurance companies, all the huge dollars, right? Even sovereign wealth funds, that had so much money in treasuries. It's just, it's a non-productive asset.
Yeah.
And so here you are, you buy a stable coin, you get 6-7% in the DAE. I don't know, sounds pretty good to me. And you can get the same yields on your Bitcoin. If you don't want to leave it in your ledger and you want to, lend it out, you can make, in some cases up to 10% in places, right?
Yep.
Again, I'm not advocating that. I'm just saying that it's there if you want to take the risk. And I don't even think it's that risky, but anyway, I think that, I think that we have to start thinking about this as a global, global development. It's just hard for all the countries to get together. I mean, just think about the history of regulatory policies in each one of these places, right?
Well,
yeah.
Well, real quick question on that note, because we're seeing talks on the IMF and the World Bank and the Bank of International Settlements about another Bretton Woods, and CBDCs are coming, which are like running in parallel to what's happening with the crypto market. What are your thoughts on that? And eventually they will come together because they're going full.
Yeah. Yeah. I mean, I think everything will be fungible with everything else. So I do think CBDCs or countries' digital currencies will transact seamlessly with Bitcoin, with Ethereum, with NFTs, with everything. And I think so. It's probably going to take 5 to 10 years. I mean, I don't know. The one thing I've gotten wrong, completely wrong, has been the scale of growth. So when I say, oh yeah, we're going to get to 500,000 in the next 10 years, it ends up happening in 4 years. So this world of, all value being placed on a chain somewhere, on a blockchain somewhere, and being fungible with each other, I think that's coming. It makes a lot of sense, right? I mean, I would love to have everything I have of value in one place, right? And have it secured. It's hard to keep track of, all the things, right?
Yeah. So Dan, a couple more questions as we wrap it up. What do you hold in your personal crypto portfolio? I'm assuming Bitcoin, but what all coins do you have?
No, I just have Bitcoin and Ethereum.
Okay.
Yeah. And it started out like 80, 20, 85, 15, and that's just changed since 19 because Ethereum has outperformed from when I purchased it. But sure. I still wouldn't. I didn't. Raul, as you mentioned, he went all in Ethereum. I haven't touched mine. Yeah. My thought is it's virtually impossible to trade. I bought it with the idea that I was going to hold for 5 to 10 years plus, and that's it. I don't think about it. I put it out of my mind. I don't calculate the returns or anything. So
I know you're a big fan of artwork. Will you invest in any NFTs, any artwork or things?
Yeah, I'd like to. I have a limited amount of bandwidth. There was a DGen ape that I really liked, but it sort of wasn't offered. And, then the next time I looked, it was, 10 times the price. But I think there's some really cool stuff out there. And I think eventually you're going to see artists and musicians and, creators. I think you're going to see creators tokenize their productivity. And so I think that's coming. It's a little complicated, but sort of like royalty streams. I think that they're going to want to have more control over their revenue and be more also directly connected to their fans. And so you've already seen that sort of world of digital value start to grow. I think that's a big, that's a big market. But again, like, this didn't exist really even 6 months ago. So it's like, I only have so much bandwidth. My analysts on my team are deep in the weeds, of course, and in the space. And, they've got their plots of land on Decentraland, and they've got their art that they've, put up and decorated. And they, my son has been active with NFT racehorses. He's been buying horses and racing them. And, so I think that this whole new gaming universe, it's a billion gamers out there.
Yeah.
And basically they're being introduced to, this digital asset ecosystem through gaming. And they're the ones who are most comfortable with digital value and digital property. So I wouldn't be surprised if we really had, like a massive acceleration driven by a whole new group of people. I mean, last year it was about, oh, the institutions are coming, the institutions are coming. Maybe this year, it's really been the gamers, and maybe we got more of them. Maybe the next 6 months, they really, take us vertical. We don't know. We don't know. What I do know is that it's still very early, and that the growth here over the next 5 to 6 years is just going to be tremendous. And if I were a kid coming out of school, this is the only thing that I would be looking at. I don't think there's anything, if you're financially minded and interested in that, I'm not saying, go from being a pre-med to this. I mean, people have different interests, but in terms of being involved in like, complete structural change in how we see value, I don't think there's ever going to be, I certainly haven't seen anything like this, and it's still early. Don't you feel like it's still kind of, early? It doesn't feel like, you still have to spend a lot of time convincing people that you're not crazy, right?
Oh yeah. Yeah. I talk to many different folks. I still get pushback. What about this? What about this? So it's still very early, and like you were giving the analogy, it's like 1997, the dial-up days, and we still got more to build and more people to get into the market. Want to wrap it up here with some quick rapid fire questions, such as, what's your favorite food?
My favorite food? I'm not that difficult. I mean, my wife would say that I am a little difficult, but let's just see my favorite. I don't know. It's a tough call. I like a good steak, I guess.
For sure. Favorite musician or band?
So I've got a few, but someone asked me this question the other day, and I came up with an old favorite of mine, The Police. So I'm gonna go back to that one. Even though I heard this incredible AC/DC like video the other day that was like mind blowing. But anyway, we'll go with The Police.
Favorite movie?
Casino Royale 2006.
Good one. So you're a Daniel Craig Bond version.
I don't know. I just think that's the best Bond movie ever made. And my son and I used to watch them over and over, and he loved them when he was little, the cars and the action and everything. So Thunderball would have been my favorite before, but that 2006 Casino Royale was just magic. I don't know, who came together on that production. Some of the other ones haven't been so good recently. I'm looking forward to this next one. We'll see if it, regains some of its old magic.
Yeah, I'm looking forward to it too. I'm a big, I am a Sean Connery charisma.
Yeah.
But Daniel Craig, just like the real ruggedness, tough aspect
Yeah,
of.
I mean, I liked actually, I kind of liked all of them in a way. It's weird. Roger Moore, I loved Moonraker and The Spy Who Loved Me. Those are the first ones I saw when I was a kid. Seeing those movies in the late 70s, it's just like there was nothing like that. It was, people had landed on the moon, but it wasn't like today. There was no internet. There were 3 TV channels. You went to a movie and you saw just absolutely like unbelievably fabulous things on the screen. I just don't think it's the same. It's not the same today. You have so many different things, and and they've got AI powered, VR and all this kind of stuff. It's just a different world. But I also love Dr. Zhivago. I remember that was a movie I saw many, many times. Yeah, but I'll stick with Casino Royale.
Favorite book?
God, there's so many. That's really a tough one. But I like the book by Camus called The Rebel. It's a sort of philosophical treatise. I read that in college, and probably, I was blown away by that book at that time. Sort of left a huge impact on me. But I would say almost anything by Shakespeare. We read a lot of Shakespeare in high school, and I don't know. I think everything that we read or see or do today is really a derivative of Shakespeare. So,
well, I am in agreement with you. Oddly enough, I'm a big fan of Shakespeare as well. And I remember it's just moments in your life when in high school, I had a great teacher. We read a lot of Shakespeare. We went in depth and analyzed.
Yeah.
That was like a moment that opened my understanding on a lot of things. So,
yeah, I mean, it really only takes one great teacher to change your life. And, I was very fortunate to be at a school where there were many great teachers. There are a lot of terrible teachers also who are, ideological and all of this, but you have one just great teacher, and, your whole life can change. So, yeah, I completely agree.
And finally, when you're not a 10T or doing any investing, what are you doing for fun as a hobby?
Well, I guess one of the things that I've been doing a lot is really swimming. I played water polo in college and high school, but I've got this new swim workout partner, and we sort of do interval training, and he's 40 years old. He's 6'6", and he's just kicking my butt. So, I mean, I've really been getting in with him 3 times a week. And then I've got, a trainer as well. And so I like fitness. But the swimming is really kind of taken off with this new workout partner I have. So.
That's awesome.
Yeah.
Dan, a pleasure chatting with you, and I learned so much, and I always learn a lot when I listen to you. So thank you so much for joining me today, and appreciate you.
My pleasure. It's been great fun. And, we'll check in again in the future, and we'll see this, that the DAE is grown by another 10 times, right?
Absolutely.
Okay.